Wonderful. Good afternoon, welcome, and thank you for joining us today for this session with Cutcher and Neil. My name is Alison Bull. I am the manager of the Primary Care Practice Development Team with the PHN. So it's great to be here with you and our experts from Cutcher and Neil, Megan Goodwin and Jody Walsh. I'd like to start by acknowledging the traditional custodians of the lands that we walk, reside, and work upon, and we pay our respects to First Nation people and value their continued connection to culture, country, waterways, and contributions made to life of our vast regions. Through our Sustainability and Viability Initiative launched in February this year, 60% of general practices in this region have engaged with us to better understand their viability issues and work towards achieving their business goals. So our engagement with these practices has provided valuable insights into the challenges faced by local general practice businesses, particularly regarding financial stability. This has highlighted the importance of implementing effective financial strategies. So as a result, we have partnered with Cutcher and Neil, and this webinar series is specifically designed for general practice businesses and offers practical insights and strategies to enhance financial health and improve operational efficiency. So this first session, Attributes of Financially Viable Practices, is the first of a three-part series, and today we will cover three topics of interest: medical practice structures and taxation essentials, understanding financial statement data to identify opportunities for growth, effective budgeting and forecasting. We do hope that it is valuable for you. Please feel free to post any general questions in the chat. These will be addressed at the end of the session. If you've got questions specific to your own business issues, we will display a QR code at the end of the session that you can use to contact Cutcher and Neil directly for a free 30-minute consultation. So thank you all for joining us today. Let's get started with the session, and thank you. Over to you, Megan and Jody.
Thank you, Alison, and thank you everyone for joining us here today. As Alison mentioned, we're going to go through today the attributes of a financially viable practice and cover those three key topics. So here's just us on the screen here. So myself and Jody, we are both partners of Cutcher and Neil, and we are predominantly located in the Newcastle office here in Newcastle. Cutcher and Neil has been around since 1953, and probably about, I'd say, 15, 20 years ago, we determined that medicos were the primary base of our client base here at Cutcher and Neil, and we've worked really closely with general practice, medical specialists for many, many years now. So Jody and myself, our clients are all doctors. I'd say I've probably got one out of all the many that aren't doctors, but yes, we work predominantly or always in the medico field. So this is just to give you a bit of a heat map here of the clients that we do deal with. So whilst we are based in Newcastle, Jody and myself, we deal with clients all over Australia and certainly all across the East Coast. So my client base ranges down to say Melbourne and up to Queensland, and Jody's is probably pretty similar. And yeah, so really there's no restriction to who we deal with here at Cutcher and Neil. I thought it was important to pop this slide up for you, just so you can get a bit of an understanding of who we are and what we're about. Probably about 12 to 18 months ago now, we went through a bit of a project and a review just to look inwards to work out who we are as a firm and what's important to us and what's important to our clients. And these are our core values that we developed and we established for our firm. And what they help us to do is they help us conduct business with our clients and also conduct business with each other. So it's really important to us that we live and breathe these core values. At Cutcher and Neil, whilst we are medico-based, we have many, many facets that come off this, and I think that really creates a great environment for clients. And the fact that you can come here, we consider ourselves a one-stop shop, and we can tap in many resources to assist clients on their journey. So whether they're starting out in private practice or whether they're looking to transition out into retirement. I personally use a lot of the cloud accounting side of things, and also to the insurance side of things. So yeah, we work really, really closely with all of these divisions. This here is what we call our 7 pillars of success. And if you're a client of Cutcher & Neal, you'll see this pillar or this slide up in every presentation that we do and every meeting we have with our clients. This is what I'd like to refer to as the anchor slide, and it really shows all the things that are important to building clients' wealth and maintaining that wealth into the future. So it just really helps us navigate our clients' financial success, really. Look, I'll pop this up and I'll breeze over it pretty quickly. This is just to let you know essentially our credibility and who we are and what we're about. So we've won quite a few awards recently, and we really are very proud of these. And we're certainly really proud of our Employer of Choice award recently. So people like working with us, and we really enjoy with the people that we come to work with and work with on a day-to-day basis. So the agenda for today, so attributes of a financially viable practice. We want to talk about, first of all, practice sustainability. So we understand the landscape has changed significantly over the last few years, and especially post-COVID. No longer are the days of practices making probably huge profits as we would have really seen, but sometimes it's just about keeping the doors open and how we set up this practice and keep it there for the next generation. So we want to just touch on that first of all. We, of course, want to go through structuring. It is important to get those key parts of the business right from the get-go, just to set you up for success into the future. Understanding financial data, that's something that Jodie and I live and breathe and we are in day to day. But we understand that for doctors and for practice managers, this might not be your default information that you refer to. So we just want to go through it a bit and just help give you a bit of key insight there. Budgeting. One thing that will pop up when we get to the budgeting slide is we can't measure what we don't know. So we need to start with the basics, and even if I reflect on my personal life, we do need to put some parameters around that just to understand what it looks like and how we might need to pivot and change and move to get the most out of what we have available to us. And then lastly, we'll just wrap it up with what success looks like. So what does a financially viable practice actually look like? So how we wanted to start today is we just wanted to get a bit of a gauge of who's with us and the sizes of practices that are joining us today. So if you could kindly scan that QR code, it will give us an idea of who's online and who our real target audience is. So if you don't want to answer, that's okay, but if you do give us a bit of information, that will help guide us. We'll just give you a few moments now. Wonderful.
It's one of those things that obviously smaller practices and larger practices, there's many things that you'll have in common. Some of the challenges will be the same. We know that, finding the right and finding the great staff at the moment, everybody in every industry is challenged around Australia, but then there is differences that might happen between our smaller scale practices through to the larger ones. So just getting an understanding of how big and small all of our attendees are is helpful, knowing how we deliver. Yeah, okay.
All right, well, that's a good base. So thank you for everyone that's participated. What we can see there is there's some decent sized practices here. So 5 to 10 FTE practitioners, that's quite a substantial practice. So with that gives you a lot of ability to move around, to grow and to leverage time and things like that. So no, that's great. Thank you, everyone. All right, so first of all, I just wanted to pop up on the screen here, practice sustainability, and just to call out immediately the challenges that we know that general practice are facing at the moment. So we know that there's cost pressures. We know that the biggest expenses that medical practices have are either rents, whether that's to related parties or third parties, and wages and super. Like that's a huge impost on a practice to sustain that. Interest rates across the board, no matter what industry you work in, interest rates are impacting everyone, but we know to access to finance is becoming more and more challenging. It's not like the time of yesteryear where it was just sign a form and it was all good and it would all work out. There are a lot of hoops that you need to jump through to really get your finance under control. So, and we know that, we acknowledge that. We work with our clients on a daily basis for that. Payroll, just getting that right and knowing all the different steps and the health support services award and the nurses award and things like that. So it's just important that we do also acknowledge that can be challenging. And retention of doctors. So just like support staff, like your reception staff, your practice managers, retaining and attracting good quality doctors is really difficult. And sometimes there might be things that you need to forego in attracting those doctors. So there could be incentives in terms of service fees that you're offering and percentages to just attract those good quality team members. And also too, as well, I had some recent challenges with a client where she was struggling to get into a female or a male-dominated practice, and her being a female, she thought that would be a good way that they would really want her on board.
To value her.
And that she found that quite challenging. So retention of doctors, we know it's hard, we know it's challenging. Here is a slide that I thought was important just to give you a bit of background of how we operate with our clients and anyone new that comes on board, what we want to know and what we want to try and information we want to try and get out of you to be able just to understand your needs and your goals. So we always want to know the background of the practice. Why did you come to see us today? What's the history? What's got you to where you are at the moment? Structure, as you will point to, is incredibly important. To be set up with the incorrect structure from the start can create its own set of challenges. So just to get those basics right is really important. Jody then will touch on review of profit and loss and review of balance sheet. So we're accountants. We live and breathe numbers, so we look at that sort of detail. So these are the core things that we really look at when a new client comes on board and needs our assistance. All right, so structuring. So here we have a summary of all the potential structures that could be available to general practice. What we see at the moment, I would say, and Jody, would you agree, it's a mix of a trust, it could be a hybrid trust, a discretionary trust.
Yeah, most definitely.
Yeah, and really that's driven by what you want and what you need. So there is no perfect one size fits all when it comes to structuring, and it's a way up of what's your goal and what do you want to achieve. Is it cash flow, accessibility to cash? Is that your main driver? Is it asset protection? Is it I want to cap my tax rate? Sometimes you can't have it all, and we just need to weigh up what's important. But what I will say is, a hybrid trust structure it would be our most common one that we see, especially in the GP space. Why do we see that? It gives greater access to flexibility in terms of profit distribution. It would probably be one of the key drivers there, and also too with a corporate trustee, it gives the level of asset protection as well.
And so much up with the structuring, and for what we're looking about it is sustainable practices, it is thinking about the business at the moment, but then ensuring that everything you're doing and you're setting yourselves up in a way that you're future-proofed so that the next generation of doctors or the next generation of owners can come through. So making sure your structure is correct from an entry and exit point of view is really critical, because it's horrible for us when you might have a doctor who's worked for decades in the practice, and then when it comes time that they're trying to hand over the reins to the next person, if they're hit with a whole lot of barriers from a legal and tax point of view, it is always really disappointing, because that's not what you want somebody's last moments in business to feel like.
Yeah, you want them to be able to leave a good legacy for the next generation of doctors. All right, this here is our foundations of practice structuring, and again we refer to this a lot with our clients and especially our new clients. So over here you will see our at-risk individuals or entities. So these are the entities or individuals that are at risk of claim. So your service trust, which is your medical practice, whether it's claim from employee, whether it's claim from someone walking in the door and tripping over as they do so, and of course your doctor in terms of patient claim there. Where is inside the barbed wire is our entities where we want to build our wealth, where we want to grow for our retirement. So these are the ones that offer more asset protection. So of course your super fund that offers a huge amount of asset protection, family trust with corporate trustees, and companies as well. So we want to grow wealth in the entities that have this level of asset protection and minimize any assets held outside of that.
Yeah, our ethos is always the wealth creation, but also wealth protection. So you don't want to ever focus too heavily on one element and, for instance, create all of this profitability in an entity where you're then exposed to such a huge amount of risk that somebody could, jeopardize that and take some of that away from you. So it's keeping one eye on both sides. So we definitely want the wealth creation. And wealth, we'll talk about it. Wealth can mean lots of different things and have lots of different motivators, but then it's that protection element that we definitely need to ensure is in place.
All right, so I'll go through next a couple of typical service entity arrangements that we see and how typically our clients operate and new clients to our business come in and they're typically set up like this. So we'll have our doctor out here to the side. They're our high income earning individual typically and pay tax at the highest marginal tax rate. To be able to run the medical practice, they pay service fees into the practice, and that's the income of the practice. So the doctor's income is not the practice's income, it's the service fee that the doctor pays for the administration side of things, really to make their lives easier in terms of being able to face patients. Then the service entity would typically pay rent, and this might be on this slide here, it's to a third party, but I'll pop up the next slide where we show what we call the ideal practice structure setup, and it's our doctor paying a service fee to the service entity, typically maybe a hybrid trust or a family trust, and the rooms owned by a self-managed super fund. So the service entity pays rent to the self-managed super fund. The super fund only pays tax on that rent at 15 cents in the dollar. So the most tax effective environment you can be in Australia is a self-managed super fund. And having yourself as your own landlord and tenant, you will never have a better tenant. So you're always going to want to pay market rate rent. You're always going to pay on time.
You're going to cover all your outgoings.
Yes, that's right. So you're going to be the best tenant that you can ever have. So this really is the ideal and the optimum structure that we look for when we work with our clients. So outside of structuring, there are key pieces of information and documentation that really should be in place. We want to put those things in place now when times are good and things are going well, because these are the pieces of information that we can rely on if for unforeseen circumstances something goes bad. We can always rely on fact and we can take emotion out of it. So service agreement, this is we need to make sure that these are reviewed, and especially in light of payroll tax as well, just to make sure that they're up to speed. So we take out the employee-employer connotations, and it really is just dictating the terms of the service fee and not too much, again, in a way that the practice has control over that doctor. We don't want that, because then that can leak into that payroll tax territory. Bank account set up in the correct legal names. It may sound simple, but you'd be surprised the amount of times that people can come undone when we talk about ATO data matching if they're not set up in the right entity. The next point here is the utilisation of the correct ABN, most common in the GP space by far. And really, and I know Jodie and I have both had this for separate clients, and it's typically when the registrar goes from being an employee of the practice and then they graduate out and they start becoming a service fee paying doctor to the practice, but all the paperwork in the background in terms of the billing, the ABN link to the billing software and things like that hasn't been corrected. So they're still going out with a practice ABN. So these key bits of documentation and information are really critical in ease of management of a practice.
Yeah, and Meg touched on the ATO data matching. Nowadays, all of the reporting that the ATO receives from big companies, from our banks, but also from other state or federal organisations. It's phenomenal what they can know about all of us just by, I guess, looking at some data and a lot of the electronic automations that happen in the background. So it may seem like simple things that you go, oh, well, then, if that happens, we can then put our case forward, we can argue out of it. It's just a thing. The moment you're flagged with the ATO, which it's the idea that potentially they can then continue to look at other things. So we're just really big on dotting the I's and crossing the T's where we can, so that you mitigate your risk at all points.
Most definitely. And the other parts for key documentation and why it's important, and a couple of other documents too, that especially as well if you are your own tenant and landlord, for instance, lease agreements, they must be in place. So especially from a self-managed super fund compliance point of view, making sure that documentation is in place is critical. But also too, as well, if it is a lease agreement with a third party, just also reviewing that to make sure you're not going to get hit with CPI that they forgot to calculate down the track. Because we have seen that many times, and someone might be hit with a $10,000 rent catch-up bill, and as well insurances. Just making sure, and certainly in the cyberspace we're seeing a bit of this now too, just doing a review of that. One thing that our clients have access to, and any new clients do have access to, is a free review with our internal insurance provider. And really, if it doesn't do anything else, but apart from provide you with some comfort and clarity that you have all your I's dotted and all your T's crossed when it comes to insurance, that's all we want out of it. So yeah, just making sure those things are all good. And as well, the ATO lodgement side of things. The ATO, again, I refer back to COVID times, they were lenient.
More relaxed.
They were relaxed. They were here to help. But now it's tightening up a lot.
Definitely stricter.
Yeah, making sure those ATO lodgements and payments are up to date are really critical when it comes to operating a successful practice.
And if you are going for finance for anything, you want a new computer system and you'd like to finance it, finance companies and banks are now looking at lodgement history as part of their credentials as to how they view you. Similarly, if you were trying to set up that succession planning and maybe you'd earmarked somebody else as a potential to come on board as an owner, again, the history of lodgements is something that people need to have certainty about how the practice is operating. So it can be, just the ATO and the cash flow side, but then there's all these other reasons why you need to keep these things all in check. So as Meg mentioned, we live in data and financial statements all the time, but we're also very conscious that our practice managers and practice owners, you wear many hats. And so whilst there's an expectation sometimes applied to say you're all over the financial aspects of things, it's also making sure that you are comfortable with what all of these reports are and what they mean to practices. So yes, in essence, our profit and loss is probably the report that you have seen most often. It can also be called a statement of financial position, performance, and it indicates, in essence, how much income you have compared to how many expenses you've had to incur. And so hopefully at the end, we have some profit in the practice. Now, there's a few things that we do want to consider when we think about these elements. So profit and loss is not cash flow. So your revenue and income sometimes doesn't match your ins and outs of a bank account. So the revenue does need to be the income of the practice. So if you have your doctors on a service fee agreement, we don't want to see on your profit and loss fees received. The only fees received that we want to show on our P&Ls is any related to employed doctors or registrar doctors or locums that you may have. From a payroll tax scrutiny point of view, it's quite risky if you have a fees received figure with then an expense line item saying, for instance, payment to doctor or contractor. These are our big no-nos. So our revenue of the practice is just your generated income for the practice itself, which often is the service fee component that's come across. So whatever your percentage is that you have charged, that's the practice's income. When we think about our overheads, again, it's not just cash outgoings. There might be instances where you've paid for something that you think, well, that's an expense to the practice. Example of that might be, some new computer equipment. Now, there's specific rules that the ATO has in place to do with depreciation that basically relates back to if what you've purchased is going to last you more than 12 months, you don't necessarily get to expense it all straight away. So yes, you might have had to forego the cash, but if you haven't used it all up within a 12-month period, it may not sit as an expense line item. We talked about the importance of distinguishing between doctor and practice, and that importance, I think you've got to stress that upon not just your administration and support staff, but also for the doctors. So they need to have a pretty clear understanding of what their income is versus what the income of the practice would be. And yes, so we talked about the profitability. Now, profit for us, it's not a dirty word. Profit in a practice is not something that anybody should ever feel that they don't want to have. We want profitable practices, but for lots of different reasons. It doesn't necessarily mean it's making your owners the most wealthiest people in the world. It might be that profitability in your practice gives you the opportunity to pay your staff, your really good staff, a little bit extra above board, so you're retaining them. Or you might be able to do a really lovely fit out or have the best equipment so that it entices new patients and also new doctors into your practice. So for us, when we look at our numbers, profit is obviously a wonderful thing, but for lots of different reasons. And then, the timeliness of data is really important, which we'll go through some software in a bit. Another important thing to note is that whilst you might receive an amount of income into your bank account, if we use service fees again, so say somebody's paid you $440, which is their service fee, that amount includes GST. So just keeping in mind that is not the practice's money, and that does have to get siphoned off to go through to the ATO. There is differences between cash accounting and accruals accounting, and that's to do with the timing of when, whether you recognise your income based on invoices to doctors versus when they actually might pay you. And similarly, if you recognise your expenses when you actually get the invoice, say for your medical supplies, but that you have not had to pay the bill for, say, the next month. A big thing here that we always think about is data is just numbers. We need to turn it into useful information. So having a chart of accounts within your, whether you use Xero or MYOB, whatever your accounting platform is, but make it make sense to you, because when we're going to go through some practical reporting in a sec, you as the practice manager or practice owner, you're the person who needs to be able to make sense of the information and to be able to give it context and tell a story and learn what you're then focusing on or what we need to pivot and change. So don't feel shy about making the reports make sense to you. And then, the last one is just that we need to always look for patterns and trends. There's no point just running a 1 month P&L and looking at that in isolation. You always want to, if you're looking at your data monthly, which we always would say at a minimum we want you to do, but build backwards and create the additional data in there that gives you multiple months. So we'd always like to see you look at least 6 months, more likely 12 months. And from there, you can actually see the patterns and trends as to saying, all right, that's a really expensive month for insurance, but that's okay because this happens every year. We pay it on an annual basis. Or, hey, our income's dipped off or it's increased, but it was flu season, so that makes sense that it goes up here and it comes back down when we have doctors off, things like that. Not looking at anything in isolation.
And look, one thing I will touch on here too, and I know Jodie and I have touched on payroll tax briefly. Payroll tax in itself is a huge topic, and it's not something we're going to discuss in detail today, but we do recognise that it's a big component of general practice at the moment, and it's important to us as well, obviously. So whilst we won't go any further on payroll tax, we just want to mention that we know that it's an important component and it's a key driver for some practices.
And so whilst you can, like little things like Meg mentioned before, the service agreements, and then, for instance, how you report, it's just making sure you are still, but we're very well aware of what we need to be doing. If we now flip our focus and we move to what's called a balance sheet, so that's the other major financial report that we use. A balance sheet is a listing of the practice's assets and what they hold, and often they're split up between what's current, so something that will be used up within 12 months, versus what is non-current and will exist beyond that 12-month period. And so it's assets and then a comparison amount with your liabilities. So we list out any liabilities that you have, which you can see on the example here. So our liabilities may be your suppliers that you have outstanding invoices to. They may be the ATO for your final BAS for the period. It might be things like staff leave entitlements that we want to take up and be conscious of. And so in essence, we always want more assets than liabilities. That's the end goal, is a positive net asset position for the practice. The times where you might notice you aren't a positive net asset is, for instance, if the profits generated and cash flow is regularly taken out. So if you hold quite a limited amount in the bank account, but yet you might be a practice that has an outstanding finance liability on some equipment and premises, and you might have some staff leave entitlements there. So there are instances that have that. It's just something we want you to be acutely aware of, because it can create problems if all of a sudden you have a large amount of your staff who want to take their long service leave, for instance. And so in that instance, we need to ensure that the practice owners are aware that they would then be responsible for potentially a contribution of capital back in to make that bank account a healthy balance again. Again, so this says at least annually for balance sheets. So balance sheets isn't, for us, your more critical performance management sits in your profit and loss report. Balance sheets at least annual. I would think monthly or quarterly would still be my preference.
Yeah, I'd certainly look at quarterly for sure. So probably when we do our BASs for our clients, we're also touching on balance sheets, then looking at just the smaller things. Sometimes it could be, is there any unpaid wages? Like if we processed a pay and then actually somehow forgot to do the actual payment to them. And you would be surprised that does happen.
Yeah.
Your super liabilities, making sure those are up to date, because super is another point where you have no real wiggle room.
Yes.
You have to pay on the due date and the amount due.
And what might happen is, the practice manager or finance manager might be off on some leave at the end of a month, and they might be on, an extended lovely holiday, and somebody else tries to step into their shoes, and, the to-do list, some things might drop off, and so it may not be until the next quarter that you go, oh gosh, we have missed paying staff super. Or the worst part, I feel, is if a staff member ever comes and raises these things as a concern. You never want your staff to feel like there's room for error in payroll. We know is extremely complex, but you don't want your staff to feel that. So keeping an eye on it regularly is important. The other thing just to note is that if you use, say, MYOB, Xero, QuickBooks, any of these Reckon programs, if you were to go in today and run a balance sheet report, it will not automatically pull through what your staff leave balances are. So payroll always sits in a part separate to the financial reports. And so whilst you can run a payroll report that tells you your staff's annual and sick and long service entitlements, it doesn't automatically show on the balance sheet. So it is something to always stay conscious of as to how that leave provisions are being managed.
Yeah, and if that's something that's really important to you and you're a long-standing practice and your current accountant isn't recognising those leave provisions on the balance sheet, you should raise it.
Yeah.
It can be a huge cost to a practice, and if these employees decide to leave due to retirement or move on to other roles, it can really hit hard when it comes to cash flow. So yeah, if that isn't on your balance sheet currently, really raise that with your existing accountant.
The other things, and these are things that as well you might have heard, you might have been involved in all these things, or you might have just heard the catchphrases in talking with the accountant or bookkeepers. But other parts that you want to consider is always we want to minimize tax where we can. So that's about making smart choices with the tax legislation and how we apply it in a business. So depreciation is one of those things. When you buy new assets, it's making sure you're taking advantage of whatever rules are out there at the time with the ATO and with the federal government. Effective financing. So this is something that sometimes when we meet a new practice, we look at it and go, oh gosh, we wish you'd done something slightly differently when you set up your new fit out, for instance. There can be quite big discrepancies between the tax benefits of financing something as a lease versus financing it as a chattel mortgage, for instance. So it is something that you really want to make sure your accountant is all over, because residuals and balloons and the timings and also the tax deductibility, it does make a big difference for the profitability and the cash flow aspects for the practice.
Yeah, and that certainly was prevalent during the times where there was temporary full expensing. That showed some really sometimes distorted figures for practices in terms of profitability because of that instant write-off they could get. And it was also important to consider that in line with the term of finance that you needed to put in place to make sure you could maximise that deductibility. So, for instance, a chattel mortgage situation, if you had low-cost assets, like teaming those together.
Yeah.
A fit-out where ordinarily you might only get a write-off at 2.5%. Whether that would be better suited as a lease. So these are all the sorts of conversations we have with our clients every day, especially when they're looking to do big practice fit outs.
Projects. Yeah.
All right. So before we jump to budgeting, which is going to be our next topic, we just wanted to get a bit of an idea and understanding of everyone that's online. How do you feel about budgets? Do you use it in your practice currently? Have you given it a go and you haven't quite got there? Or do you go, no, ignorance is bliss and I don't want to know anything about it? So if you can give us some indication here, we can help guide our next part of our presentation, where we will go through a few examples of how to do a budget and all the different steps we look at.
Yeah, and again, it's one of those things that often it's, yes, we know we want to do it, but currently you're so stretched from a resourcing point of view and you're pulled in so many different directions that, it might feel daunting or overwhelming. And so hopefully what we show today is there can be some quick ways and some easy ways to get some budgeting wins that help you from a reporting and a financials point of view, without hopefully adding more burdens onto your list.
Yeah, and one of the things we will talk about is there's no need to make it complex.
Yeah.
We're accountants. You might think by default we want to make everything complex, but we're certainly about the opposite. Tap into resources that you already have. Tap into softwares that you already have available to you.
Yeah.
So it's really interesting here that a lot of the participants have said that we try, but we haven't quite got there. So hopefully we can go through a few things today that might make that just a little bit easier for you, and you can maybe take a few key takeaways to implement that into your practice. All right, so budgeting. We think that it's a bit of a forgotten tool and its importance might not have as much relevance as just the day-to-day grind that I think sometimes practices go through. You get on the treadmill, you get there in the day and you just go.
Yeah.
And we have that too as well. We understand that there's so many competing demands in a day. But it is important to establish that, to have something to measure, because it really is such a shame when we see practices that work themselves to the bone and then really have nothing to either show for it at the bottom line or have nothing to pass to the next generation of doctors. So that's why we think it's a bit of a forgotten tool sometimes. So look, the key things here that we just wanted to talk about is it doesn't need to be complex. There are programs, there are softwares, there are simple spreadsheets. We don't think that there necessarily needs to be a spreadsheet. There's now programs that use the basics of a spreadsheet and make it a bit more user-friendly in the software space. What budgeting does help you do is it turns something that you go, I'm just working hard, and brings profitability to the front of mind. So it helps improve focus. It helps give you a point to review. It can assist with cash flow and cash flow, like, as Jodie said, cash flow and profit are two different things. But really when it comes to budgeting, cash flow is super important. And also too, it helps align practice's goals. So really, what's the practice striving to achieve? I imagine you all want excellent patient care. Well, as Jodie also mentioned previously, sometimes you need that profit there, though, to be able to support those objectives. Getting the best piece of equipment available, being able to have really nice rooms or a nice clean space for patients to come in, and having the ability to take on more patients and see them. So that's why we think budgeting is so important. So what we will do now is we'll take you through a few steps in budgeting. So again, it's structuring, it's knowing what you're dealing with from the start. So it's unfortunately probably going to the drawer and pulling out those financial statements and seeing what kind of structure that you're set up in. It's understanding what data is readily available to you. What can you just tap into to get something and pull it together? We're also going to go through preparing a budget at 2 levels.
Yep.
So for medical practices, and this is not the doctor side of things, this is just the practice. It's about what's your income. So what's the practice's income? How do we generate it? How do we get it in there? And then once we have this pool of money in these funds, well, where's it going? Where are we directing it? And where's it best suited? And then the reporting side of things. So we've got all this data. All right, how do we get it out of there to get it something meaningful? And really, what are our KPIs that we can set around that's important? So whilst it might not be huge levels of profitability, it might be just slight increases on last month, and knowing that you've got maybe a bit of a buffer there for flu season when you know that you might need more staff coming through and you have some spikes in wages and things like that.
Yeah. So we're going to work through setting our financial goals, and then the next steps after that would be how we track against it. And a big part of what Meg mentioned is, as you see things happening, once you've got the data there and you can notice, it's all about changing and adjusting and adapting quickly. If something's not working, we say scrap it, pivot, see what else you can do differently. So we're going to start with our income focus, and then how our income's generated, how that pays, what rates of service fee we're paying, what other income we have. So that moves through to then be the income of our practice. From the business perspective, it has our major categories of expenditure. So again, that'll be tracking the expenses side of things, and then at the end seeing how much profit we think we will have versus how much profit we do have, and going through from there. So our employees, when we think about our practice expenses, our employees are often our most valuable asset to a business, but they can often be the most expensive. And so being able to track for those changes is also critical. We want to use the data that you have available. We don't want you to have to go and add something so enormous as a task that it makes it feel like it's unachievable. We do want to use what you've got in your accounting systems, and similarly your practice management software. So we take the data from both of those where we can and flow it through. And then what we're going to display for you today, which I'm going to focus on the income side and Meg's doing the expenses, but from the income perspective, there are programs now. So Cubico is one that some of you may have heard of, some of you may use, but it electronically does what we will be working through as well.
And this is not saying this list here is certainly not an exhaustive list. It's just what we typically see. We love Xero. We think Xero is great. It's a very user-friendly product. And we also like the fact that we can on both sides of the table, we can see real-time reporting. So if our client rings and has a question about something that's going through their program, we can log in and we can see it immediately. We can even do fix the issue for them and things like that. But we can really get a good understanding of where things are at, and it's certainly cash balances and things like that.
Yeah, timely data makes all the difference. There's no point the accountant, often the accountant will come in December, but the year ends in June. And so we hand you a figure that's 6 months old and you go, well, that's not reflective of how we're feeling in the day-to-day now. So all of these programs give that really timely, up-to-date, accessible information. What this is, so I'll talk it through and then we can work through the actual, it's in Excel because accountants love Excel for us, but the idea that first we're going to focus on how much revenue can end up in the practice's hands. And that is a direct correlation back through to how much your doctors are working and how efficiently they work, and also how they bill. So all of these things we'll talk through is working out, and we'll do it just for a month, but okay, how many days are you budgeted to have Dr. A in your practice? And so obviously that shuffles and changes based on new age approach to medicine, which has a different work-life balance. So we're finding that the default position is not full-time anymore for doctors. Often they do want flexibility and a balance, and so the way that you consider, oh great, I've got a new doctor coming on board, that's fantastic. Well, they might only be doing 4 or 3.5 days, and then how does that work out with your staffing costs, and how does that flow through with your practice expenditure? So thinking about how many days are in the month, how many days the doctor will actually be working, what their day looks like, and knowing that everybody is different. So that gives you then your budgeted hours per doctor. We then want to consider what our average consultation time is per doctor. And that's one of the metrics that we often ask doctors or ask practices and say, like, what's your average consult time? And we don't want that to be, oh, I don't know. We want people to be armed with information to know how they work, and to understand how their day falls out. From there, when we know what their average consult time is, you'll be able to work out how many consults they should be able to get done. You then put that against an average consultation fee. And so obviously that shuffles and changes depending upon a doctor's billing practice, their bulk bill versus private, and how they operate, which they do have the they do have the autonomy over that choice. So in a practice, we often do see quite a range in the way people bill, but then that will come through and give us our budgeted doctor's medical fees. So then our next step is, okay, well, a doctor's going to earn X amount. How much does the practice get? So what's our service fee methodology? Likely just a percentage. So let's say we take 30% from Dr. A, and that becomes our service fee practice income. To that, we add any other budgeted income that you'll have, such as your government incentives. You might on-charge your consumables. You might get some government grants for registrars and training, things like that. So all of your other income gives you your total budgeted practice income. That is our income line item. That is what we're expecting to see as all of our ins that we then have to pay all of our expenses. So then it moves through as to what your budgeted costs are, which leaves us with our budgeted profit. When we were talking about the timing of doctors and how they all work and how often they're in your practice or for how long, it is important because you do really need to effectively utilize your space. Gone are the days where everybody has their own room. Often we are seeing doctors sharing a lot more.
Definitely.
Whether or not they enjoy that as much. But from our accounting point of view, it is all about that economies of scale and being efficient with the way that you operate.
Yeah, and also too, sometimes doing some analysis, and we do this with quite a few practices, to go, all right, well, if I put a service fee paying doctor in that room, how much income are they going to generate for me for the practice versus paying a flat room rental?
For an allied health or somebody who might be in.
Yeah, and we do that analysis quite a lot to go, well, this is a potential income earner for that space. So it's important to consider it like that as well.
What we're going to show you, so we'll do a bit of a live version, and what you'll see is that it does spit out data per doctor. And so another conversation that can happen on the back of this is actually benchmarking your doctors either against each other, or furthermore, they should also be benchmarked against themselves, because what you might be able to identify is, Dr. A is getting X amount per hour and doing this many consults, but Dr. B achieves this rate. Does Dr. B know, do they have a way of doing their billings and their item numbers and leveraging off your nursing that maybe we can have them help assist retraining with some other staff members?
It's about education.
Sharing the wins where we can. So, again, this is in Excel, and the way that we would structure it is, all right, we want to understand what our time budget is. So this is starting with the days. I'm just going to pretend like we have 3 practitioners. And so in essence, we're doing this same exercise over, oh gosh, I feel like I shouldn't have done that now. Oh, it was working so beautifully. Oh golly, have I really done that? This is what happens when you do. There we go.
We're back in business.
And my small heart attack will subside. But we're just going to go with Dr. A here, and then we're going to say Dr. B. And the way that flows through is that we're considering this from each doctor's perspective. So we now have Dr. A. You know that all practices are not the same. Everybody operates differently. Some people might be open late at nights, midweek. They might not be open on weekends, or you might have others that are open all the way through. So it's working out what your week looks like and how many locations you're in, but then it's tracking. So we're just going forward for the next 12 months. All right, how many working days do we have per month? And that's considering things like public holidays and any shutdown times. You want to take this out. We also need to factor in annual leave. So I know that our service fee paying doctors are not your staff members technically, and so as such you're not able to tell them what they can and cannot do from a leave perspective. But we always hope that there is a relationship, that there's an understanding where the doctors give you enough notice of where they're intending to take leave.
That's right.
Because if you have a doctor who is deciding to do this wonderful trip for 3 months around Europe, like fantastic for them, but that creates a real strain in the income and the cash flow for the practice. And so in that time, you might then have to deal with different staff needs and planning ahead for that. So it is trying within reason to project forward where people will be taking their leave and how much.
Yeah, so the lines of communication there need to be open from the doctor to the practice manager, so the practice manager can start planning for when they need to start filling space, and also to being the capitalist accountant we are, we need to know whether we can actually generate enough income if they do want to take those amounts of leave. So you can't control it. The doctor controls themselves.
Yeah.
But what at a practice manager level that you can do is you can plan for it. So it's about the two working together.
So that then works out what our available days are per month. Now, thinking about hours per day. So I'm just going to say that this doctor only does 4 hours every day. And that will then work through to say hours per month. From there, we want to consider what their average consult time is. So Dr. A takes 16 minutes as their average. Now, that average consultation time, that information can come out of your practice management software. So if you ever need any pointers on how to calculate that, let us know. But that data is readily available. And this should then, oh golly, I've done something. This should have given us a budgeted consultation number.
Maybe at the top you didn't put in all the...
I'm wondering. Meg and I trialed this so many times.
We certainly
We
did.
were on fire, and now I've lost. Let's see if this figures it out. Oh, hang on.
Yeah, just put the rate in there.
So usually this would give us, and let's cheat and see if we go to this fellow. Usually this would spit out and give us a beautiful calculation. Oh,
Yeah, maybe because we're sharing the screen and the delays, it's not quite working.
it's not lagging. Okay, hang on. So sorry, work with me for a moment. I'm just going to see if we can force the IT to work for us. Oh, sorry, I'm such a silly. We also need to factor in how productive your doctor is.
That's true.
So we do obviously understand that for every moment that a doctor is in your practice, they are not working with face-to-face patients. There will be times where they're taking notes. There will be times where they're talking to staff.
Not everyone can turn up every day and be on 100% of the time. So
Yeah,
so maybe that's 85% of your day.
there we go.
There you go. We got our figures.
So now what it works out is to say, all right, for this doctor, this is how much they should generate in patient fees throughout the period. And you can, this is a very basic version where it just carries for the entire year the same each month, but you obviously go through and tweak it when you know that things are changing. New doctors, we often say, if they're new to the practice, we say that they might come in for the first month at like a 60% productivity, and then that ramps up, and by the time they're in, month 6 or 7, they're back to a 90%. So making your considerations there, being conscious that every doctor is different. So you may have doctors who play a heavy role in training others.
Yes,
you may have doctors who play a role with HR. So because of that, you just need to work out what's reasonable as a productivity and what's actually achievable. From here, and I'm hoping all this flows through beautifully. Oh gosh, this is too small for you. But that then comes across and generates through as to what our...
So that's put on Dr. A. Yep.
Dr. A here, what the gross practitioner's fees are, and then we want to address, well, how much of that actually sits with the practice. So saying that they're charged a 30% service fee, well, whilst the doctor's generating 29,000, 8,800 of that is the income that sits in the practice. And then from there, obviously we have all of our doctors that would list down here that would give totals. But you then also add in any additional, so sessional room rates that you might have.
Incentive payments that are received. Also to, as Jodie mentioned before, if you've got registrar doctors, so if you've got employee doctors, it's recognising their fees. And really that's really the only situation where you would need to do that. And as you will see when Jodie flicks back to the next page on the financial budget, we could then go build on that in terms of, all right, well, what does the practice need to stay open? So you'll see down the bottom there that from when we know of what practice income we've got available and what our pool of funds are there, then what expenses do we need to keep the doors open? So you certainly by all means could go down there and add all those expenses in. And it's also not permanent and
it's not static.
Yeah, that's right. So, and if you need to revisit it every few months and adjust and maintain, so just because you thought that you could get, well, maybe you have one of your key staff members that said, look, I've been offered a job elsewhere, and I really love it here, but they've offered me more money. We all know how hard it is to train new employees and get good quality people. So you might have thought your salary and wages were 50 grand, 100 grand sort of thing, but you now need to pivot and show a different number. So that's really important. So yeah, by all means, you could then go populate this spreadsheet with all the different expenses. So Jodie's just putting in a little bit more income here, and this is just to give you a bit of an idea of how we build on doctor, then what the doctor pays in service fees, and then all the other third-party income. But what I might jump to shortly is I might just give you an alternative here. So whilst you could certainly fill in this spreadsheet, and we've broken up into different categories, I want to just bring it to your attention that, and sometimes people might not know this, and this is just a demo company. So this is not a medical practice, by the way. This is just the demo company offered by Xero. I can't produce, I can't show a demo company for one of our existing clients. But what I can do is put forward the basics here and how you can utilize your accounting system to make it simple for you once you know how much income that your practice is generating. So as Jodie worked out, she's gone down and she's worked out what the doctor brings in and what the service fee contribution is. And that's what would sit up here in this sales number. So just for people that don't know, just how you get here, it's accounting reports. And then the report that you pick is this one here called Budget Manager. So this is where you build your budget inside Xero. Once you've actually got a budget inside Xero, you can run so many variations of reports and go, all right, well, this is what I've done for the first 3 months, and this is what I'm budgeted for the next 9. So this is what my profit's going to be. You can run reports in Xero where you can go, all right, well, this is what my month was meant to look like. This is what it turned out. What's my variance? So once you've got your budgeted data inside Xero, you can really run a myriad of reports of different ways and look at it and analyze it. So this here, and you can build on this too. This links to your chart of accounts. So if you recognise service fee income, you recognise incentive payments, you recognise fees received from registrars, that will all be sitting here. So you can just build that of what you think you can do. If your income is, and I'm not saying it's going to be like this, but if it's the same every month, you can use this little button and it sends it all the way through, and you can apply different percentages as well to ease your input of data. Yeah. So let's just go apply here. But what you can then do is you can go down and put expenses in. We all know that overheads, look, they're estimates. They're estimates based on history. They're estimates based on what you know is coming up. So you can run through here. We can put in for advertising, we're doing $500 a month for advertising. And then if you go, all right, well, I think I'm in a subscription, and that's what it is. So we send that and we apply it to all, $500 populated for the rest of the month. So maybe as a starting point, you can just put in a couple of key months and then send that data forward and then adjust from there. Just flex it around, really.
Finesse where you need to, rather than starting from scratch and having to key every item for every month. Make the software do it for you, and then you fine tune.
Yeah, so you would go down, you would pull all this data in, and you would save it. And then that is there for that 12-month period for you to run your variations. So I recommend this to a lot of clients, and I know that they do use it. And we actually use it sometimes for for clients that might be a bit reluctant, for ones that we want to actually see those variations and help work with them.
Yeah.
So yeah, that would generate a net profit number and would keep all the data centralized in Xero. So this is what we're talking about when we're saying you don't necessarily have to do a spreadsheet. We have a template there and we use it, but you don't need to create a spreadsheet from scratch. You certainly can use the products that are available to you. And I know that Cubico do have some ways that you can generate some good budgeting information as well.
Yeah. I was just going to, just before we close down, just from a doctor's income point of view, what's also important is, can we just go up to our performance reports, is being able to track what's actually happened as to, so ignoring our income and expenses component that's on this screen, because as Meg has mentioned, you're able to use Xero for that if you choose, but looking at it from a billings point of view as to how the doctor has performed compared to what you thought the budget would be. So this is on a monthly basis, and it gives their financial outcomes from a gross billings, and then you can drill down and do it on a financial year. So often getting that data on a monthly basis, being able to check how the performance has been for the practice, and how you thought you were going, and then making those quick movements and quick pivots where you see. So you might, a doctor who might be new to the practice hasn't achieved what you thought. Well, we need to then identify that nice and quickly, get some additional support services in place, whether it's from their peers or colleagues that might be able to get things back on track for you. So it's about having quick, reliable and timely data that gives you the information you need, not making things too complicated and not focusing on too many things either.
That's right. And also knowing where you're going to hit the spot with, so look, our doctors are our income generating top line of the chain where it all falls down. So knowing how that information is going to resonate with them as well. So is it doing charts rather than putting numbers in front of them? Is it doing traffic light reporting? Green is good, red is bad. Things like that. It's about what you know is going to get the best outcome from the doctors. And if they see that, hey, I was budgeted to do X amount and I should have really done that, and why haven't I? That maybe plants a seed in their mind to go, all right, well, what can I move? What can I manipulate to get the best out of myself? Because really it affects their back pocket as well, not just the practices.
Yeah. And we've seen it lead to some pretty nice, good, constructive conversations where, one doctor might go, oh, like I'm doing, the nurse is doing this for me. What do you mean they're not doing that for you? And so
you don't know what you don't know.
Yeah,
that's exactly right. All right. Well, what I might do is I'll just keep going through a couple of items here, but really that's just the basics in what we look at and how we build it from the ground up in terms of understanding budgeting. So that's just a little snapshot, and that's what Jody works through. KPIs. So this is just some basic KPIs that we've put in place just in terms of managing and understanding practices profitability and knowing what you can measure. So one thing we always say, and we always do it here too in our firm, is don't make them too complex. Don't make them these big convoluted measures that no one can achieve and no one really knows how to achieve it.
Yeah. And you just want to pick a few. You want to pick a few that are in key areas.
Yes.
And then if that's your focus for this 12 months, well, fantastic. And maybe in the next 12 months you change to a few additional and drop off some that you're achieving really well. But don't make your job harder than it has to be. And you want to do things that are useful and give you credible, great information that you can then act on, and that's understandable by your practice owners and other doctors and things like that.
That's right. So look, we'll just finish here budgeting with what we call our budgeting baseline. Look, well, as we've mentioned a few times, it's not set and forget. So you have to put it in place. There is a little bit of work to get it up and running, but using systems that you already have available and using data that you already have available hopefully should make it a better process. So it's not set and forget. It's, as Jody mentioned, sometimes you just need to pivot. So popping that data in, look, it's not reflective of where we are now. All right, let's adjust, let's move on. Traditional financial reports such as a profit and loss statement that Jody went through and a balance sheet, they're great. They are a static point in time of information They clearly outline income and expenses and assets and liabilities. But sometimes, and maybe for practice managers too, it's not detailed enough in terms of reflective of the day-to-day operations of the practice. It is a point in time at the end of the financial year. It's monthly, looking at information monthly. It's looking at certainly information quarterly.
Yeah.
And just understanding, all right, well, what are the trends and what do we need to work towards? Do we have a Christmas closure that we need to budget for as well? That sometimes can really trip practices up, and I know it's very timely at the moment. Use of cloud accounting and what else is out there. So use the tools that you have available. Look at softwares that speak to each other. We like Xero because we also like Xero add-ons. We like to not put data in one spot and then recreate it in a second spot. We like to have data sucked in from different places. So talk to your accountant. If you don't know what's out there and available for you, talk to them, and if they certainly can't help you, we can. So we have what we like to refer to on board as, we call her our Xero hero. She knows everything about Xero, and if she doesn't know it, it's not worth knowing.
But somebody out there, whatever you've dreamt up as your need, if you think this would be really great in my practice, I wish I could do this, some really smart person has created an app and an add-on that will achieve that for you. So it's not going and starting from scratch and wasting all of your time and energies. It's thinking smartly about how can I get the end outcome I want, but what else do I use to get there?
Yeah. And continue to assess the goal of the practice and the outcomes. So it's not a set and forget. It's not it's not just put it in place and go, all right, it'll work itself out. Continue to review with your key stakeholders, and your key stakeholders may be, well, they're your owner doctors, they're your owner practice managers as well. We're starting to see that a little bit more as well. And your practice managers, even your reception staff, and they know what the key drivers are. So just really identify who those key people are in the practice business.
Yeah.
And show them and share this information with them, and help grow and pivot and change and refine it when needed.
Sure.
All right, so look, we're coming to the end of our session now. We hope you've taken a few nuggets of information out of it, and can help apply it to your practice and help really turn the corner if there are some challenges that you're facing. Look, the key takeaways are: understand your structure, know the basics, know what you're dealing with, because look, if you don't know if you're running in a company or running under a trust structure, you really don't know those essentials before you can really
influence them.
Influence change and influence how it should be. Prepare a budget. Sometimes it can be painful, but really it does pay dividends to put that in place. Understand the different drivers and the matrices within your business and how you can influence them for the better. And the final one is review and start again. So it's about looking at it and going, all right, well, look, like Jody said, we might need to pivot. So take a look, review, implement it. Sometimes we even have that here. If you're going to fail, you fail fast. Don't just hang on and hope for the best. Really make some change if change is necessary. So look, thank you so much for joining us today. We really hope you did get something out of it. And as Alison mentioned at the start, up on the screen now is a QR code. Please feel free to click on that and book in a 30-minute free consultation with one of us. Thank you, Alison.
Thank you.
Thank you. Thank you, Megan and Jody. That was just so interesting and I think very motivating. You've probably provoked a lot of thought out there. So, no, really, really great session. You've made accounting and finance really attractive and fun. So it's great. It's great to be partnering with you, and really, delighted that you're on board and available for general practice businesses to take the next steps and develop their business. So, as mentioned today, Megan and Jody are taking general questions, and the QR code's there if you've got specific questions to your business for that free consultation. We do have a couple of questions here in the chat that I would just throw to you, Jody. Just bear with me at them while I click on these. It's navigating my way around this system.
You'll be better than I was on that Excel.
We've just got one here. Is it better to pay up front for fit outs, etc., if possible, or is there benefits in getting finance? And if there are benefits, then I'd love to know what would those benefits be for practices?
Yeah.
Oh, look, it's so again, there's not a one size fits all. But so when I'm talking to my clients and we're looking at whether to finance or whether to pay out a cash flow, finance is still quite cheap. So look, it may not feel like that sometimes, but maybe earning interest on having funds available and readily available in a bank account and earning potentially, say, 6%, or at least, say, even 5% at the moment, versus maybe getting some finance where you're paying an interest rate of 7%. Just doing that way up is something that we definitely do.
Yeah, and then I'd also say with that depending upon what the fit out entails,
yes,
if it's bricks and mortar and it's things that you can't take away with you when you say you pack up and change premises, the tax laws around what you can claim as a tax deduction, it is exceptionally low. So it's a 2.5%, which is 40 years to basically claw back the tax deductions.
To get the benefit.
Yeah. And so the alternate is there are finance structuring available where you might then be able to pay that finance off over a 6 or 7 year or 5 year period, but the tax deduction is then matched to that. So there's definitely benefits.
So you match the cash flow output to the tax benefit, if that makes sense. So look, we do work with our clients to lease fit out quite regularly, and it really does prove to be a worthwhile exercise to do that.
Yeah, but it does involve for us being well aware of what is included in the fit out, what parts may be equipment, and how we could structure that separately, and working really closely with the bank as well. So often we will give very clear instructions to banks as to how we need that to work, and as long as that's executed, then we've got ticks the whole way through.
Yeah. So, and I know it probably sounds a little bit lame, but cash is king. So how much cash we can retain, we want to do that. And if finance is available, we want to tap into those resources.
Great, thank you. Another couple of questions for you. So education and training of staff, is there a percentage of your budget that is recommended and can be tax offset?
So no limitations from the ATO's perspective about how much you invest in your staff's training and education. Often it comes down to what the practice deems necessary or what skills that skill uplift that you're after. But from the ATO's perspective, no limitations on how much you choose to spend. From what we would see probably is that the amount of spend varies depending upon staff.
And type of practice too, and needs of staff.
And level. So often you might, we might see a retiring practice manager who's given a few years notice and heading out, and instead of trying to recruit from external, they understand they would like to upskill somebody that they already have and kind of bring them through the ranks. And so it's identifying early what skills they have, what formal qualifications or additional training needs they might have, and that's where you, I guess, strike your balance or strike your goals as to what you work through. But it is.
Yeah, in terms of percentage as well, what I would say is I would consider, and what we consider employment as a whole. So people might historically or traditionally might say, all right, my salary is $80,000, and they're just focused on that. But when we think about employment costs for a practice, we go, all right, well, to have that person here, it's their salary is $80,000, but they're super on top of that. That's their component, and we want them to do these training courses, so that's part of their remuneration. So in terms of percentage, it is hard to identify exact without knowing the particulars of the practice. But I will say is consider all facets in terms of keeping someone on board when looking at spend of training.
Great. Thanks, Megan and Jody. Another question for you. So a practice owner has been asked by some of the doctors for a higher percentage if they work more days. And can you provide any tips on how to determine if there is capacity to adjust a service fee by doctors' earnings?
Yeah. Okay. So look, that's certainly a challenge, and there's no absolute answer. What I would say is, if you were to lose that doctor altogether, what impact would that have to your practice? And there's nothing wrong with maybe doing temporary sort of rebates and agreements
Yeah.
in terms of, so we would give service fee discounts rather than doing like guaranteed payments and things like that, because that can trigger payroll tax implications and things like that.
Yeah, and I guess it's understanding. So just say, for instance, they were on 35% and straight away they went, well, I want to go to 30%. Well, it's going, this is their billings for the year's 500,000, 5% of that is X, that's coming off your bottom line. So making sure that whatever that lost income generation from the doctor's expected to be, that you are comfortable that you are wiping that straight from your profit, unless you were somehow able to change your expenses and how you're scaling. And yeah, in that situation, if they're saying they would actually like to work more, so
maybe it may,
yeah, it may even itself out. You'd then want to step into, because you're getting that additional income, albeit at a lower percentage, but you do need to consider things like, do I need additional staffing resourcing? Is it going to make any changes to my expenses?
Is that additional day a Saturday where I have to pay rates and different
penalties and things like that?
So, but we've done lots of modeling like that with our clients and work through different scenarios to go, all right, well, if you were to do X, this is what it looks like.
And look, there is definitely more happening in the market with negotiating than just taking a stock standard, I do this and pay this. Like Megan mentioned, a lot of practices have had to develop some sort of incentive system. So perhaps it's, hey, once doctor hits 700,000 of billings in a year, then for beyond that, they get a reduced service fee and it works through as a rebate. So you can be flexible with how you incentivize your doctors. And then it's just definitely running it past the accountant to ensure that you're not going to trigger anything untoward for the practice, and that, you're mitigating the risks where you can.
Great, thank you. What would be a reasonable productivity percentage to apply for an experienced GP versus a registrar? Any tips?
Can be tricky. That's why we laugh.
If your experienced doctor is playing a heavy role in practice management, in HR, in training those registrars, then that can have a significant impact. But if we're just saying it's a doctor who comes in, does their job, sees patients, leaves at the end of the day, we would go with like probably a 90.
It's at least an 85 to 90. But like Jodie said, if that experienced doctor is wearing many hats and even maybe doing a pseudo manager's style role, so not practice management, but managing a business manager, their percentage might need to be more like a 70. But certainly if we're patient-facing doctors, we're billing as much as we can, it's an 85 to 90.
With the registrars, I'd say depending upon what term they are at.
Yes, that's true.
Perhaps you take a look at, say, a week's or a fortnight's worth of their booking schedule to see how quickly they're moving through patients, how busy they are with patients, and then also how much time they're using before or after with a check-in or with their training doctor. And I think that would probably give you a good gauge. Also, what we would see in experience is that all registrars are different, so you can have them all at the same level. However, some may work faster and harder, more differently than others. So I do think with registrars, it's take a sample of how they are operating, and then maybe lift a bit to set a goal for them.
We like to call it a BHAG.
We do.
A big audacious goal.
Yeah, great. Lovely, thank you. That fulfills our questions that have come through on the chat. I'm sure that there are many people taking advantage of the free 30-minute consultation with you and the QR code, so thank you very much for that. I will let everyone know that there is a short survey at the end of this session. It will pop up and available for you as the session closes, so we'd really love for you to provide feedback on today's session. Thank you very much for everyone's attendance, and a big shout out and thanks to Megan and Jodie for all their efforts in today's session. We will be continuing to roll out activities focused on general practice viability. So any feedback that you've got about what you want to hear from the PHN and the partners that we're working with in 2025 is really valuable. So take a moment as we close down and Thank you very much, everyone, for your attendance today.
Thanks for having us.
Thanks again.